Look at what we can expect from the local market today. We are joined by Stan Chamu from IGE in Melbourne. Stan, let's start with the lead in Wall Street and certainly these record highs. So the S&P closing is its highest level since October 31, 2007, and the Dow posting its 8th highest close in history. Some pretty incredible gains there overnight, or at least I guess levels there. In terms of gains, I think both markets were up just under 0.5%. The Dow up 0.4 actually, in the S&P 0.7. Mixed picture in terms of commodities. Could we see even more gains for the local market today?
Yeah, absolutely. It seems like we had a pretty risk-on session through European and US trade. Of course, that was triggered by some of that economic data we got out of Germany, with economic sentiment showing that it's had a strong bounce to around that 48 level from about the 35 that most analysts were expecting. At the same time, M&A activity in the US seems to be picking up, and this really does encourage investors that confidence has returned to the market. So it's not too surprising to see that we are expecting a pretty strong open for the local market as well. Maybe not as strong as what we've seen in the US, but of course, if we consider some of the gains we've already had this week, then it probably evens out a little bit, I suppose. We're expecting the Aussie market to open up 0.2% at the moment to about that 5092 level. So that's just within striking distance of that 5100 level. And of course, this will probably change a little bit as we get some of the big earnings that we're expecting from the local market today. There's not much on the local economic calendar, but of course, with BHP, Fortescue and Woodside Petroleum all reporting today, then we're bound to have a pretty big day. BHP should be out any time with its first half results. We're expecting to see earnings come in at about that $5.7 billion level, with underlying EBIT of about $9.5 billion. So this is probably going to get a big contribution from iron ore, particularly on the underlying EBIT front, where we're expecting iron ore to contribute about 47% of earnings. Of course, there will be some key things to look out for, particularly on cost performance, and of course some of their projects going forward, whether they'll be able to increase production and really help the miner improve after a pretty subdued performance over the past couple of years or so. We also have, of course, their dividend coming in at about 57 cents. That's fairly flat, but I don't think analysts were expecting a bit too much from that perspective. In terms of their different resource, their mining operations, I suppose iron ore will be expected to continue contributing going into the second half. And maybe we might see a bounce back in the likes of nickel, aluminium, and coal going forward. But at the moment, I think petroleum and iron ore is basically what's holding the company together. And yeah, no, that should be a very interesting report, I suppose. With Fortescue, the figures are a bit hard to digest, just mainly because they're going through a massive ramp up through 2013. So the commentary might carry a bit more weight, particularly at debt management and how much they expect to spend on some of these expansions that they're going through. So most analysts just feel the figures might be a little bit misleading, and the commentary might carry a lot more weight. On the Woodside front, we're expecting earnings of around $2 billion. Now, that's an adjusted earnings figure, so that excludes that $974 million gain from that Browse sell-off. The company is expected to have about a 61% payout ratio. That brings the final dividend to about 75 cents a share. So that's probably the key thing to look out for, as well as costs and obviously the LNG performance going forward. That always gets a lot of attention on the Woodside Petroleum front. So yeah, absolutely, the resources will be the ones to watch today. Of course, we've got a little bit of a gain at the open, but any major beats in any of these miners might see the local market off to a flyer. At the moment, though, we're looking at BHP's ADI, and it's down slightly, just about 16 cents from that $39 level where it closed yesterday to about 38.84. And iron ore actually ticked higher to about 158. So it should really be interesting to see how all these leads feed through to the resources and what we'll see going forward in today's trade.
Yes, Stan, sorry, just bring us back across those numbers you're expecting from BHP, which is the headline result, because that's due out in about 20 minutes. What were they again?
So it's $5.7 billion, that's the underlying earnings, and the underlying EBIT is $9.5 billion.
Okay, interesting. Let's also talk currencies. Seems like the Australian dollar gained a bit of ground overnight. What was that on the back of?
Yeah, no, I think yesterday we had a bit of a chat ahead of those RBA meeting minutes, and it really seemed like the expectations for rate cuts were slightly reduced going into the announcement, and in true fashion, the RBA basically said they're still happy to maintain this accommodative stance that they've got at the moment, but it seems they might take a wait and see approach and see how the previous rate cuts feed through to the local economy over the next few weeks or so. We still have a few data prints to look out for, but CapEx spend might be one of the big ones. This might also be influenced by, of course, BHP today. Their FY13 CapEx guidance of about $22 billion might be changed a little bit. We might see them reduce that. Of course, just cost management's a big issue for the miners at the moment, like we saw with Rio Tinto, and we might see that same thing with BHP. And should these miners start cutting down on that CapEx spend, this might have an influence on how the RBA feels about the mining cycle going forward. But as it stands, the Aussie dollar managed to push into that 1038 level. Now, this is the level we're actually looking at for selling, fresh selling for the Aussie dollar. And I suppose with downward pressure in interest rates still quite rampant going into the year, then we could probably see sellers start to creep back in at these levels. There's not much on the economic data front to influence the pair today, but absolutely some of the earnings reports we're getting today, particularly from the big miners, might have an influence on how the Aussie dollar trades today.
Okay, Stan Shamu, thank you so much for that comprehensive wrap. We do appreciate it.
Cheers, Kate.
Stan joining us live from IG in Melbourne there. Well, back to that headline result. Given what we saw out of Rio Tinto's numbers, BHP Billiton may want to follow suit today and announced cost